Hey, good morning, Michael, Jacques, Francois, Arturo, Kimberly, my lovely bride. Good morning, uh, Rabar. Morning, uh, morning, everybody. If you want to chat with me, morning, Al. If you want to join the chat while I'm live, make sure you subscribe to me here on YouTube. The bell, I guess the link's over down here where the monster is here. Right in the corner. Just click that little button on the video, and you can be a subscriber, and the chat becomes active. Different platforms. If you're on a browser, it's over usually to the, I guess to that side. Yeah, everything's backwards. It's over to that side. And if you're on a mobile, sometimes it's down below if you're in portrait, and if you flip it sideways and do whatever, it pops up to the other side. And yeah, so while you're at it, though, you might as well hit the bell with the little doodads, because I'm going live again tomorrow, and then I guess twice tomorrow, really. So every day in the morning, and then on Tuesdays I do an evening show and take your request for 30 minutes. Scattered this morning. Scattered, covered, and smothered, as they say at Waffle House. Morning, Goose. Good to see you, my man. David, Jan, Craig, Dan. Morning, everybody. So I found a chart. Very, very interesting here. Has a 98.4% correlation to the moves in the S&P 500 with an R squared. So if you're a statistical buff, I took un poquito, a little bit of statistic as part of my engineering degree. So mostly engineering statistics, not just statistics. So let's pull this over and flip the screen and talk about it really quickly. And here we go. Morning, Mary, Dave. Morning. So, one chart to rule them all here. This is by the market ear. Look at this right here. Central bank balance sheets aggregated around the world and the correlation to the S&P 500. Look at that chart. Liquidity matters, and given that the global liquidity measure, this GLJ metric, has a 98.4% R-square correlation to the S&P 500 dating back to 2009, you should pay close attention to decreasing worldwide liquidity. Now, we do have periods where the red line exceeds the yellow S&P 500 line, yellowish, whitish, whatever color we want to call that. Looks yellowy to me. But we haven't gotten a large pullback like this since 2009. Now that's it. That is right after the great financial crisis. So we've had a heck of a run. And right now, S&P pushing above. In past times when it's pushed above, we get a large correction. So we could see another period like this one right here. Right there. And everybody thinks the market dropped because of COVID, but possibly it was due to a liquidity problem. Some other people I know were calling for a correction in the 3 months leading up to the COVID problem, and it had nothing to do with COVID. They were calling for, they called it almost to the dollar as far as how far we pulled back. So does the news make the chart, or does the chart make the news? It's still that is really, it's really a mind bender. The more and more you think about it. So this is one to keep an eye on. I'll do my best to keep an eye on it. I actually have a liquidity indicator that I keep turned off on my chart just to not cause confusion. It's called News Age, NEWZAGE, if you want to add that in TradingView. Now, I do use TradingView, and that's free for everybody. So any of the charts I pull up, you can copy them in TradingView for free. Doesn't cost you anything to get a free TradingView account. Let's talk about empty office space for a second. Just visualizing it. If you put all the office space that's available right now into one office building, one standard New York, Chicago, LA, whatever office building, and made that one big tall building, it would be over 7 miles tall. That's how much empty office space there is right now, and it's looking like it could get worse. All right, one floor, roughly 20,000 square feet, about 11 feet tall, one floor. So we're talking about, zoom this up, 48,125 floors worth of U.S. office space is vacant. We have almost 1 billion square feet of empty office space out there right now. So CRE may run into a problem here. Yeah, that's pretty crazy, right? Washington, D.C. has 3,699 floors. New York has 3,790 floors. Both of them exceeding the height of Mount Everest if you were to put them all in one building. So just kind of, put into perspective what kind of empty, when I talk about commercial real estate, CRE, and the pending problem, this is it right here. The mainstream media, for whatever reason, keeps harping on the fact there's no problem. It's no big deal. No issue. I don't know. Salesforce walked away from a 30-story building in San Francisco, just leaving it there. Just walked away. So is it going to be a problem? I think time's going to tell. This could lead us into the next financial crisis when this all comes to head. It's not a fast-moving problem. This is one of those problems where you got to watch it, and then all of a sudden you get like the Lehman Brothers problem, or something like that. The straw snaps. I thought we were going to see that as the banks kind of blew out there in March, and they quickly swept it all under the rug. So this will come back around eventually. I don't think we're on a path where this is going to resolve amicably, smoothly. So, what was this previous website? That's an image, actually, out of Discord. I have it posted to myself. It's a premium subscription to Zero Hedge. You can get these charts like this. So, all right. Cost you like $100 a month. You can just ask me for charts like that, and I'll throw them to you. So, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, and fun, and is not a recommendation to buy or sell anything. Anything. Not from me, not from any other person. Certainly not any financial instrument in the markets. No stocks, no bonds, no options, no futures, no nothing. I'm not recommending you buy anything. Take your money out of the bank, put it in a mattress. Probably safer than anything else. If you desire personal financial advice, hire and consult a financial advisor. Welcome, everybody. Welcome, Michael. Welcome, Mark. Glad to have everybody. So let's get into what everybody came for, right? Market analysis, what's moving. We already talked about the chart with the correlation. And right here we go. So, ES, I kept it on a 30-minute because on Friday we were talking about this target. Look at that right there. I mean, it stopped right at that 44.75 level and did a 50-point drop and then went and extended the downside. It actually extended that little move right there. Hit that 1272 perfectly, bounced right back up. I would have probably had it like this, and it came up short, but right there, I mean, it's hard to argue. That was a support level overnight last night. Hitting that at 1, 2, 3 o'clock this morning, bouncing up this morning. Now, survey for the chat. Bullish or bearish? What does this look like to you? What do you think that is? Based on all the things I talk about, for those that have been here many times, what would you say? Coming off of a lower low, below the roadmap line, with an extension lower. What do you think that is? And Valerie says bearish. Y-bar says bearish. Yeah, bearish. This is a bearish extension pattern. We can very easily see this extend even lower. All right. Please be careful with your money. That was a 3-wave up, even though it shaped up as potentially a 5-wave. It turned out to be a 3-wave, and this looks like we're going to go lower. We're holding under this consolidation so far today. Right here, this consolidation. Holding it. One little candle up there and reject. Can zoom it up even more. So that's our levels. All right. Here's our levels right here. Stuff to watch. We got to get back up through this orange zone. Back up through 4450. Otherwise, probably taking a trip on down below 4400. Certainly, if we break these lows from overnight, you know, this is ES. If you've never watched ES before, this is the S&P 500 futures. I pulled these up because it gave me all this data since, you know, the market opened at 6 p.m. yesterday, Eastern time. Gave me all this data overnight. Now the S&P 500 chart, it hadn't started moving yet. All right, this looks slightly bullish, but when you look at the data here, it looks pretty bearish. This is why I'm able to kind of track these things a little better than some of the other analysts out there that might give you their opinion on, hey, that S&P 500 chart looks like we're going higher. That's a bounce right off the moving averages, and I think we're going on up. Well, the smaller time frame here and the complete picture of data shows us that we're probably going down, at least test this zone right down here, the bottom of this. We may come back. If this low doesn't hold right down here from back here on my birthday, if we break that, probably going on down in a blaze of glory. All right. 4,300 becomes highly likely if we get below these lows from back here on June 26th. All right. There's the kind of stuff to watch. The VIX and the dollar are up from the move on the yen mid-Friday. So, yeah, we'll look at the... There's the VIX futures. See what we got cooking here. And that actually looking a little bullish, potentially. And we didn't get a huge pop. Yeah, called for a pop off of that zone there. Look at it on the daily chart. Haven't come up to the roadmap line. Definitely depends on time frame for VIX here. SVXY, my preferred kind of way to track something you could trade on VIX. While you could go with VIXM and trade the options there, and they're treated like Euro style. If you're not familiar with, if I'm all talking Greek to you right now, I'm sorry, but you could play those, but they do have a weird theta decay. These right here, I don't usually. While I have played a few shorts on this, you know, buying puts lately, I would much rather wait for this to get the 15 to 20% drop. Load up long, because this thing reverts back higher every time we get a drop. That's the high probability trade. Trading for it to drop is like, does it happen today? Does it happen tomorrow? Maybe. Of course, maybe you could just lose your money and you don't buy enough time. The smarter play, wait for it to get the 15 to 20% drop, load up, and make your money when it recovers. It always recovers. It always recovers. And you know, the one exception being COVID right here. We got this outsized drop that was crazy, and I made money trading VIX long. Right now, I'm just kind of waiting for this drop, hold support, turn back higher, then I'm going to load up. But right now, just waiting for SVXY to get a 15 to 20% drop. Right now, looking like it's just going to churn near the top. We could even go higher high here. So we'll see what happens. NQ, remember, it's not a recommendation to buy or sell anything. NQ here still made a lower high. Looking like it's going to get the deeper retrace here. We have not seen a 3% plus pullback in the S&P 500 in 80 some odd days. probably be like 87 days now tomorrow. And you might be like, well, what does that mean? Well, usually every 47 days on average, we get a 3+% pullback in the S&P 500. And we're talking about, we're pushing almost 90 days now. Feels cooked. Market's open. Hey, Beth, morning. Morning. Russell, holding a little bit bullish here, actually. That not looking too bad. That actually held a higher low, holding the roadmap line. This can, if we break out over this high, up through 1917, that looks pretty bullish, actually. So small caps, that's IWM. If you're not familiar with Russell, how to trade it, IWM looking kind of on the bullish side here compared to both NASDAQ looking like it's going to drop. That's QQQ. And ES, the S&P 500, SPY, SPX, also looking kind of bearish. CL did break out of the wedge, but did not get a higher high than this rejection back here. So rejecting a little bit today. If that can turn positive, we break back above this high right here. We may run up to test the roadmap line. Coming in up here at 76. We get above that, 80 to 82 is my target before we get another correction, and we probably just come back and hit the roadmap line again. Gold still parked at the roadmap line, just sitting right above it, waiting for that push up through 1950 to add to any kind of positions on gold for my personal trading. I'm not recommending you do anything. All right, 1950 is the level I'm watching. You may be a knife drop buyer and want to load up now, but we could drop even further and lose a limb. Hey, Sledge, morning. Bitcoin still just turning in just consolidating right here. Hadn't popped up, hadn't popped down. We didn't get a bullish weekend. There are, when I zoom down in the time frame, we could find a 5-wave up in one of these smaller charts here. There's a potential 1, 2, 3, 4, 5 to a higher high, just barely. And this could lead to a 618 retrace back down in the 27,000 area right here. All right, we could see this could happen. All right, could potentially happen, and it could come down and hit the roadmap line again. We could see that happen. All right. That potential is on this chart. You might be like, I don't know what you're talking about, 5-wave. That's Elliott wave pattern. You may not believe in the voodoo of Elliott wave. A lot of people don't. That's okay. But there's a little micro 1, 2, 3, 4 with a higher high 5 right there. Potential like that can lead to a retrace. Now we could hold that 4. We could hold right in there, hold the breakout level and go higher. This potential is on the chart, though. If you're super bullish on crypto right now, just be careful. This can come around. Miners have been rocking it. Coinbase has been rocking it. This kind of move on Bitcoin may freak everybody out, and usually that's what we need before we go higher. Is freak out the longs, scare people out of the market, then we move. That's how the market works. Takes the most amount of money from the most people, and then makes the move that would have made everybody tons of money. Keep it in mind. NASDAQ. Ethereum is not looking nearly as bullish. This is failing to break out, holding a lower high, series of them. That's lower there and lower there. Still, this is a bearish chart right now. Until we start breaking higher highs, this is a bearish chart. I kind of expect a retrace back down in this $1,500 area. But nothing is high probability. Sideways would be my primary expectation because we've held support and we've held resistance, and sideways would be just not doing anything. That would be my guess on Ethereum. DXY, wow, look at that drop. Right back down to the support level. If we can push below that, we're probably going to finally get these extensions lower that I've been calling for months. Months and months and months. Down to 99 would be my first extension. Probably retrace back up to 100, 101. Then look for more extensions lower. Ultimately, I want to see this move down into the mid 90s. Stuff moving today, PWM, Prestige Wealth, Prestige Worldwide. We talked about this one on Friday. That is just a crazy chart. You know, crazy chart, crazy moves. Look at that, 23% down. I think I warned on Friday, be careful in this stuff. Not enough data for me to do anything with it. I mean, even on the 15-minute, we don't have a whole ton of data. That looks corrective and probably going to go lower low than where we started. That's a corrective move. 3 waves, made up of 3 waves. Highly likely this goes down at least back to where it came from, if not making an extension lower. Be careful on this stuff, all right? And that would be negative, and it's not going to go negative, so we got to put it on log scale. Yeah, I can go down to way on down. Yeah, be careful. That's just a dangerous chart right there. All right. And I probably, let's see. Let me flip back and flip back. There we go. Mob. Look at that move right there. Beautiful chart. Beautiful move. Dangerous looking on the actual daily chart. Just a big sideways, choppy inside this range right there. What do you expect to do? More sideways. MBTX. Big pop. Potentially breaking out, but this is a medical specialty, biotech, pharmaceutical related thing, and I don't trade those. I mean, be careful with the biotechs and the pharmaceuticals and all that stuff, please. IEP. This one got hit hard and has an opportunity to come back up at least to the roadmap line. At least. It's opportunity, not that I think it's going to necessarily, but even a bearish case would put it back up to 45.38 right up here. Bearish retrace, and then we could go even lower. Carl Icahn admitting he got it wrong, and yeah, like there was one of those watermelon seed squeeze wedge things, and that's why I think they're so dangerous. That's why I always warn about them. I mean, look at that. We seed squeezed for a good long time, and then pow! I mean, when you put the squeeze on it, it pops, and it's usually unpredictable. Somebody could have predicted it went down, but they don't always go down. They don't always go up. They don't always do anything except increase in volatility after they squeeze. That's another one that looks quite gnarly right there. Just sideways, choppy price action right there. Be careful. I would not trade that with your money. HELE. Well, Helena Troy. Look at it. Off. Okay. This is difficult right now. It's probably going to get a retrace because that was a low. That was a lower low. This is a higher high. So it's expanding the range. And when we talk about, I always talk about these levels right here. Look, there is no, it expanded the range here, more volatility, and that's kind of a 3-wave-ish move. Reminds me of a lot of what the S&P 500 just did, and we can extend lower. Be careful, please, if you're trying to chase something like this. I mean, we can go down to 73 very easily, just like the S&P, and this could be able to pop up right here, and we could see it drop right back down. And if we did that, yeah, right in the zone, 138, and then can come back to 73. So be careful chasing this one. I don't care what kind of home furnishing news there is. I haven't heard a ton of retail being ultra bullish. I mean, it's kind of a story of haves and have-nots in the retail space. Prime Day coming up tomorrow, and we'll see what Amazon does. Boyle continuing to be impossible to trade. NG1 exclamation point. Oh, I did an @ symbol instead of an exclamation point. That's just sideways in the range. Like, it's not going anywhere. It's not breaking out. It's not breaking down. It's just more sideways would be what I expect on natural gas. So boil and UNG and all the derivatives there, just going to keep chopping in the range. Gorilla Glue, holding the roadmap line. This can come right back down. Be careful on Gorilla Glue. IOVA, another biotech. I don't like biotechs. They show up on the list all the time because they move a lot, but they move in unpredictable patterns, at least for the way I track this stuff. We could see a pop up to 10 if we can get up above this prior high right in here. Be careful. AAOI semiconductor. Wow, that thing took off. Higher low, and let's see if I can figure out any prediction on how high she goes. Yeah, that's right to my target. If I had come across this before, I would have said 750 is the extension target. Now look at that. Look, it did the perfect thing. It did that thing I always talk about. If you're new here, this is a classic pattern where we rally up, we hit the 1272 right there, we retrace back to the point from where we broke out, and then we go in on an extension right up to the 1618. Did that perfectly. And then the most likely is to get a deeper retrace. But it can break on out. It can keep going. There's more extensions up there. Just becomes less likely, and not something I usually go for, because that was the high probability move. And now anything else to the upside is lower probability. And we're going to get up where we have this consolidation right here. We had this resistance. Can it break above that? That's a good question. It's got some stuff to work through. It did the high probability move. I would say the next high probability move is a retrace, but it can just come up here and churn in this zone from $8 to $16. I mean, it's a pretty good move. But look how long it spent in that zone before it broke down, and now it's popped back up. You don't think it's going to be a resistance again? I bet it would be. SDIG, that's below the roadmap line, looking a bit like a hot garbage chart because that's the lowest low, and lower would be what I would expect. There's UNG, and nothing. That's probably going to reverse split before long. Be careful chasing UNG. GREE, another garbage chart. That's a three-way move up, and it can easily go lower. Resistance right here at 10 at the roadmap line. That's going to continue coming down. Resistance there. Be careful. MELI, yeah, I expected to retrace. Probably coming back to test this zone right there. Snow. Reject it off. Coming back to the roadmap line. Classic stuff. Classic stuff. Roadmap line, and then this area down here. Probably, well, if that was the right. And this area right here. FMC, how low can she go? That was a bearish move right there. See where the support is. Getting close. 93, possibly down to 85. That one can build support and turn into a reversal higher. I would not be buying it long until we're back above that roadmap line on the daily. AAP, Advanced Auto Parts. I mean, this looks pretty bad. Advanced Auto Parts, ouch. We're below the COVID lows. I mean, I don't know about you. I just bought a new motor for my truck. I bought it at AutoZone, not Advanced Auto Parts. I didn't even know AutoZone had carried motors, but they do. So, my truck spun a bearing through glitter metal all through the truck and all through the engine. And shop said, if you want to keep driving it, you got to get a new motor. We got a new motor, and I'll tell you what, used car prices, You know, it was way cheaper to buy a new motor than it was to go buy any kind of used car. And certainly not a new car. So, I don't know if auto parts, I mean, I don't know what Advanced Auto Parts has got going on, but below the COVID lows does not, I don't know. Let's see, nope. AZO, not AZN. Now, AutoZone is reflecting more of the sentiment, I would think. And then, oh, dang, ORLY. There it is. Yeah, O'Reilly. Man, that's definitely reflecting what I would think. So AutoZone or AZN or AZN AAP has something wrong here. Something's not. That's no bueno for Advanced Auto Parts. Of course, they've never had the part I need, so maybe that's why they're not doing so hot. SQ. That one looks like maybe we're going to break out above the roadmap line. Maybe. Just kind of waiting. I've got alerts set right there, and then I've got more alerts at the gap fill. What gap fill? This one right here. Right in there. If we can break above that $73 area, beautiful. Probably head up here. There's a potential measured bounce. It's not the best one. It's kind of a deep one, but if we can break back above, get back above the roadmap line, we can look for extensions up here to 112 to possibly 140 area. Rio, that looks like a bad chart. Probably going lower. BHP, another sideways to down chart for me. FCX, stuck at the roadmap line here. Goose, I know this is one you got your eye on here. We bounced up. This is a potential measured bounce move, but we're not breaking out above the highs yet. We're just not doing it. Not yet. And if we can, higher targets way up here around 90, but we're not doing it yet. We're not getting there. Set your alert up at 42. That's where I would consider it. When we look at the futures chart for copper here, this looks bearish. I don't care what everybody's saying, that like copper should be ultra bullish with the dollar dropping, blah, blah, whatever, yakety schmackety. That's bearish, and it's part of a bigger bearish pattern here. This has me concerned when I think about it. Copper kind of being the canary in the coal mine, so to speak, for the economy. You know, demand for copper goes up when we're doing good. Demand for copper is not going up right now. This doesn't even look bullish. All right. It looks like we could see a low that we haven't seen in, you know, since COVID times. Please be careful chasing copper. All right. Bias for the day. Kind of on that bearish slant. If I zoom back in and really kind of jump back down to the 30-minute here. If we can get back above this, it tilts me back bullish. So I reserve the right to flip bullish. But right now, this is a bearish pattern for continuation lower as long as we are under that roadmap line and this kind of resistance zone here. And this consolidation we did last week into Friday, and that was from Thursday into Friday morning. We popped up, we dropped, and so I'm slanted bearish until the market proves otherwise. And if you want to keep up with it, the link is in the description down below me, and we'll talk about it in Discord. So you just got to be a customer. It's like $5 for 3 months. Another, I think it's 20 more bucks gets you, 15 months total. So $25. You can get a watch list for 15 months and videos and get in Discord and talk with us and get the extra trades and stuff that I put on during the day. All right. Have a great day, everybody. I'll see you again tomorrow for another Morning Monster. Had the pineapple this morning. Quite tasty. I like that one. Reminds me of an odd oddly tasted sweet beer, kind of. Anyway, have a great day, everybody. We'll